done. I think we're a historic first in terms of being on time, so the burden is high. We're going to do this session in English to be kind to our guests. I'm actually going to skip introducing them because, this is a placement here, because Delphi has done a great job with the app and has all the bios in, and I really want us to use the time to go straight to the questions. And I think we're well represented here. Most of us know each other, but we represent different types of the investment ecosystem. We have people from the buy side and the sell side, public and private markets, on the strategy side, on the actual investment side, foreign and local. So hopefully we'll get what we need here. I've asked them two things. One is a pretty annoying question I used to get as a strategist for years, which was, tell me what you don't know. You would walk into an investment meeting and that would be the first question. And the smart-ass answer to this is, why don't you first tell me what you know, and then I'll tell you what you don't know. But we're going to skip this. But this is the spirit of the question that I asked them to, because we're competing against a number of different panels here, and I want them to really bring forward what they think would be interesting to you, the guys who are listening to us. And I also I asked them not to say anything about ChatGPT. So that's the end of it. Those are the rules. And I'm going to bookend with the non-Greeks, and I'm going to start. So we're going to start with Agnès, and we're going to finish with Aziz. And Agnès is my special forces, so we're going to go straight into battle with her. And part of the reason is because Yianos has been doing work on megatrends. And because we are here, and because it's April, and because it's 2023, we sometimes miss the big picture. And I want to start from the high level. So Agnès, what are we missing here? What is the thing that we are not really talking about? What don't we know?
Yep, so hello everyone. So Greece sits at the intersection of two megatrends, the climate transition and the search for energy security. And by security, I mean independence in the energy supply chain that Greece can have with its friends, partners, and allies. And Greece is in a very enviable position. It is rich. It is rich in those natural resources, sun and wind, with which renewable energies are made. Not only that, but it's doing very well with its climate transition. It's getting 8% of GDP from NextGen EU, almost for free, to invest in this transition, and it is the fastest country so far to meet the milestones to get to disbursements. But the needs are huge. After Russia's invasion of Ukraine, the European Union has set a new target for itself to have 45% of its electricity coming from renewables by 2030, and we're in 2023. And the current average share of renewables in electricity is 20%. So there's a really long way to go. So imagine Greece in this position with a lot of resources that are in great demand in Europe, friends and allies, second megatrend, that can fulfill part of these needs. So Greece, for me, has to think beyond its own transition. It has to become an electricity exporter to the rest of Europe. It has to be, in a way, what I call a climate hero.
So we're not thinking big.
We're thinking huge.
We're not thinking huge enough. All right. But,
oh, you're not thinking.
All right, but we just had a panel right before that they were starting at the very end, kind of bringing up certain issues about not having, enough financing here. So how do you do that? I mean, what size are we talking about?
So that's the thing about money, is that this is the first obstacle that is often quoted. But money is not an issue. So I work at Barings. We have 2 resources funds that invest in resources and agriculture. There is no limit to how much clients are willing to invest in something that is good for them, really. So money is not an issue. The climate transition is neither too hard nor too expensive. It really is the 1,000 compromises and trade-offs that are uneasy, that need to be made along the way. But Greece understands that, right? So last in July, the government, the Ministry of Energy and Environment opened a one-stop shop to get licenses to increase capacity in renewables. But something that is not really well perceived is that renewable energy, unlike fossil fuels that lay below the ground, compete for land with crops, livestock, people, nature, and in Greece, with archaeological sites. And isn't it an irony that preserving the future gets in the way of preserving the past gets in the way of protecting the future, and that environmental concerns, because biodiversity is also an issue with the wind turbines that Greece is installing, isn't it ironic that environmental concerns actually get in the way of protecting the environment? So I think Greece needs a transformation plan. All the countries involved in the transition need a transformation plan that understands from the start to the finish everything that it needs to put into place to get this installed capacity growing. And there are zillions of investment opportunities along those lines. And so I just think Greece needs to, open its arm to investors without discrimination between foreigners and national investors. Of course, every country wants its national investors to be the first to benefit from this climate transition everywhere, from Chile to Asia to the rest of Europe. But given the needs that are huge, no discrimination, simplify the procedures, pre-select lands that can be used for installing capacity, and then become a green hub for the rest of Europe.
All right, so I'm going to hold on to two things. Money is not an issue, so keep that in mind, because at the end I'm going to preserve some time for you to fight it off, hopefully. And also that we might be a bit biased on the way that we are investing so far, not just in terms of how we're thinking, but in terms of who is investing and where. So with that in mind, I'm going to stick to long term, and I'm going to ask Themos to tell us what we are thinking and talking about, which is not really as clear-cut as we think. So, take us to what we don't know also.
So I think that there is a big part of the debate that is not talked about, and it's very specific to Greece. Greece is not a country that has run historically cycles like the ones that the US is running, 7 or 8 years worth of expansion and recession. Greece has run mega cycles. Actually, we are in the third mega cycle of Greece after World War II. From 1950 to 1975, 1976, Greece was growing on the back of Marshall funds and restructuring of the economy. Because of the very fast growth, it didn't develop an external sector, an externally competitive sector. You didn't have big industries that were exporting competitively to Germany, right? Let me put it like that. Entering the EU started the second mega cycle because protectionism was lifted. So a lot of these companies died an early and painful death. A lot of academics have called this a premature deindustrialization. Danny Roderick is talking about this in many economies. It's not a unique phenomenon. And we all know from 1974 to 2010 that Greece grew on the back of infrastructure, funds coming from abroad, which created imbalances. We had a violent 10-year worth of correction. And now the big question that investors are asking is, what is the future? What is the next mega cycle for Greece, if there is one? And I think that Greece is ahead of an enormous mega cycle to the upside. It is a transformational decade ahead that is reliant on three main forces. The first one is that Europe is changing. The last 10 years, Europe was focused in a cost reduction model, cheap financing, low costs, export orientation, mainly because of Germany. And now Germany is facing enormous protectionism, both from China and from the US. In the next 10 years, Germany will be spending a lot of money to keep companies in, to change its energy model, and to stay relevant in the map. That means that the focus on fiscal discipline, the focus on low wages, the focus on quote-unquote competitiveness is becoming secondary. That fits Greece's model better. For instance, we have a big discussion about higher wages, and everyone is thinking, how can we have higher wages? Well, if Germany at the moment is experiencing 11% in negotiated wages, we can actually increase our wages in Greece without losing competitiveness. That is number one. To give a caricature example, in 2015, we have our banking system shut down over a budget dispute less than $1 billion. Right now, as Agnès also said, we have 75 billion worth of money coming to Greece without much conditionality. That just tells you how the framework in Europe has changed from austerity to a very different, more protectionist, more fiscally loose model, which benefits Greece. The second force is that for the last 10 years, as global trade has been peaking, global trade in services has been exploding. So you're starting to see that the services trades balances, surpluses or deficits in economies are increasing a lot more as a share of global trade. What does that mean? People in China, in the US, people in all parts of the world are traveling more. They are trading more. They are demanding global healthcare. They're demanding global financial products. Greece sits uniquely in this because some of the most competitive sectors we have as an economy are in the services side. We have a competitive tourism sector, and I highly disagree both with a very respected man who I highly respect, Mr. Simitis, who said that this is not competitive. This is the competitive advantage of Greece. This needs to be bolstered. Trade, transportation, energy transition, all of those things find Greece playing to its competitive advantage. And they will actually experience very rapid growth as a share of the economy. And whoever is in those fields is going to see extra profits. And I think last but not least, and it will be talked about more, I'm going to stop here, the starting point for Greece, right? Tight financial conditions, we don't get hurt so much by high rates. We didn't experience low rates. Very low levels of output versus the rest of the world. Has lagged for 10 years and it's catching up very quickly.
I'm gonna stop you there, Themos, because I think we know that. But I want to challenge you just give you one more minute, because all right, it sounds like a very straightforward position, but I think what you just said was like, great, we're going into a protectionism phase. How's that worked out in the past? You have 1 minute, and then we'll come back.
The standard economic answer is protectionism is bad. Now, when you talk about Greece cannot cut wages and costs so that it builds an automobile industry. It's unrealistic. However, in a setup where there's a little bit more leniency, a little bit more fiscal space, a little bit more focus on helping new companies build a better position, it can actually boost the economy in Greece for as long as that setup.
Okay, good. I'm sure people down here probably are aching to ask you follow-up questions on that, but they don't have the capacity to do that. So maybe some of your fellow speakers will do that. But for the moment, I'm going to switch gears and go a little bit more on the short term. Short term is where the pain is for investors every time. It's not the long term. So, Thanos, what don't we know very well with respect to the short term as much as it affects Greek investments, whether it's from the outside or from inside?
My key concern for the global economy is sticky inflation. Now, inflation last year reached a 40-year high. It has been falling since then to a large extent because energy prices have dropped. But core inflation, with the exception of the US and Canada and the rest of the advanced economies, is sticky. In the case of the Eurozone, has not even peaked yet. Now, all these are great opportunities for Greece, but the condition here is to bring inflation down. And so far, we have seen substantial monetary policy tightening. It has not been enough, I believe, to bring core inflation down. It has not been enough to cool off the labor market, which is extremely stretched everywhere, for the first time, actually, in recent history. And also, I would argue, fiscal policy is very loose. So I don't see the ingredients there to bring inflation down. And for Greece in particular, definitely I fully agree with the previous two speakers. There are tremendous opportunities and a lot of money. And that's amazing. However, in the past cycles that Themos referred to, these inflows ended up with inflation, current account deficits, because this money went to consumption or unproductive investment rather than investment that will increase the export potential of the economy. So I see a tremendous opportunity for Greece here, but if we don't take advantage of this in the right way, we may end up a few years down the road with very similar imbalances that led to problems in the past.
Okay, but just a follow-up, I was thinking as you were saying here that I think we spent a lot of time thinking about, why don't we have enough inflation? And shouldn't we be a bit happier, especially for a deflated country like Greece, to have a bit more, even global inflation going on? Isn't that, something we should aspire to, or is that doesn't last for long?
Some inflation is good. Definitely, we don't want to go back to the previous regime of almost zero inflation, and I don't think we'll go back to this regime. Now, nobody knows whether 2% is ideal or not, but this is a target, and we have to stick to it. Central banks stuck with 2% target when inflation was low. They cannot give up on it now that inflation is high. Also, there is a lot of debt around, so inflation will help to bring it down. But let's face it, you cannot be multiple times above your inflation target. And the fact that central banks today, they have to tighten aggressively to bring inflation down, ignoring the vulnerabilities of the economy to this tightening. I mean, we had a number of shocks, including in March in the banking sector, and central banks continued hiking. This suggests that when you are at a high inflation regime, this limits your policy options. So in an ideal scenario, even if inflation proves to be sticky, as I believe, we will end up in a couple of years from now, not as soon as the market expects, with inflation somewhat above 2%, but hopefully below 3%. But there is a risk that either we may end up with higher inflation than that, so interest rates will have to remain higher for longer, or that it will actually take a hard landing to bring inflation down, which obviously is not a scenario we would like.
Fair enough, but I'm going to keep putting you on the spot now. All right, you have a baseline and you have the risks. And since you're probably much closer to the public markets here, let's say for people who want to invest in Greece, what are the relative directions here? Is it fixed income? Is it equities? Is it real estate? Is it something else? Given your baseline scenario and the risk, maybe the risk-reward overall.
I think the fixed income trade in Greece was one of the best trades ever in recent years. Fixed income. But I would guess that the easy money has been made there. Equities, by any measure, they're still undervalued. And I think the opportunities now are at the micro level. If the funds from the NGU are spent in the right way, and given that FDI has been relatively low in Greece, even before the Greek crisis, and even more in the years that followed, this is where there are tremendous opportunities if Greece gets the policy mix right.
So I'm going to come back if we have time and ask you about the if not, but I'm going to go closer to the trenches now of the investment with one from the local perspective with Theodore, and then finish with Aziz on the foreign perspective, I guess, but the ones who are getting their hands really dirty on a daily basis. So starting with Theodore, and I'm influenced about the panel that we listened to yesterday, just before us. Are the Greek banks sufficient to drive investments in Greece in the next phase? I mean, 2022 is so, very large projects, and I'm quite curious on how you would describe the role of who was doing the financing, to what extent, are we reaching capacity constraints? How should we look into the future about, is this sustainable?
Hi, Yianos. Hi, all, and thanks a lot for the invitation to participate in this distinguished panel. First of all, let's highlight that 2022 was a record year for foreign direct investments in Greece. It's the highest number we have in the last 30 years. The FDI realized was 7.2 billion. This corresponds around 3.1% of the GDP. Compare this to an average of 0.8% FDI to GDP for the period 2002-2018, a tremendous increase in FDI. This figure, first, has been supported by some large-scale privatizations we had from the privatization program, such as the sale of the electricity distribution network to Macquarie. We had the sale of DEPA infrastructure to Italgas, first payment of for Elliniko project by Lambda. We also had very big investments in the real estate sector, 2.5 billion of FDI realized. And we have seen material activity in the energy, especially in the green side of the energy, but also in the financial sector with JP Viva and also the Greek banks selling their acquiring business. An important element to note is that most of these transactions, they relate, with the exemption of the real estate, they relate to the sale of shares. We are not having greenfield investments in Greece. And this highlights, I think, the structural issues of the Greek economy. In Greece, it's always easier to upgrade an existing hotel. It's easier to refurbish, to make new developments in existing factories. But it takes a lot of time to get all the relevant authorizations, licenses, and deal with the local communities. Bear in mind that in order to make the landmark investment of Costa Navarino, they took them around 10 years to get all the licensing. So this has been an issue. Nevertheless, we have to be optimistic. During 2022, we have seen some greenfield investment projects in data centers, in iCloud regional centers, announced by Microsoft, Yahoo. So there is activity. Coming to the question about the financing, I considered, and I'm confident, that the significant boost in the FDI has been supported and has been funded by the Greek banking sector that has played a pivotal role in the transformation of the Greek economy. During 2022, the corporate debt, the wholesale debt of the Greek banks increased from 65 to 72 billion. This is an almost 12% increase. When in 2021, this was 4%, 2019, this was 2%. So I'm pretty confident that unless you have strong financing support in terms of lending, you cannot have FDI realized in Greece. And I think that's very important to say that the Greek banks, after finalizing the cleanup of their balance sheet, everyone remembers here that we had in 2017, the NPE ratio was 45%, today it's 7%. We have increased the capital adequacy ratios. We have very strong liquidity ratios. We have one of the lowest deposit to loan ratios. So the key theme now, the key focus of the Greek banks is to support and fund the Greek economy. Nevertheless, it's important to stress that during the last decade, the Greek banks have been the main, if not the sole lenders of investments realized in Greece. Whether we are referring to financing, providing financing to large corporates, or financing renewable projects undertaken by foreign investors, we have seen that the foreign banks have been reluctant to finance and get into long-term financing. And this has been an issue.
So what moves the needle?
In my opinion, there are several reasons, right? First of all, let's remember that some of the European international banks...
Aziz is already laughing, so be careful what you say.
He's going to.
Fresh memories.
Good. So everyone has to consider that some European banks, they have realized enormous losses when they exited the market, right? This is sort of, everyone is remembering this. At the same time, let's consider the Greek banking market. It has been a market with significantly high NPE ratios. It's one of the few sectors, few markets where the return on equity has been negative or zero for many years, and the cost of risk realized very high compared to the average of Europe. So it has not been an attractive market for foreigners to invest in this market. I think this is gradually changing now. It's very encouraging that the 2022 results announced by all Greek banks, the systemic banks, have been very profitable, and we are talking about recurring profitability, not one-offs. The return on the tangible equity has been above 10% for all the banks, 10 to 12% ratio. And also the cost of risk has fallen to more comparable levels, still high to the Europeans. At the same time, I think that once Greece gets back to the investment grade status, this is going to have a positive effect. So overall, we think that there's going to be a gradual change from foreign banks. It's going to take some time, but we're quite optimistic, and this is quite important for the Greek economy as well.
Let me just attempt a very quick follow-up on that. Assume that you get the investment grade soon. Can we still finance the size of improvement that we saw in 2022 in 2023 without the foreigners, without the foreign banks, rather?
First of all, if you look at the targets and the business plans announced by the four systemic banks for 2023, all of them are projecting the same credit expansion as realized in 2022. Okay. So the answer is yes, the Greek banks are ready to finance the Greek economy. Nevertheless, we have to be honest, we have to say that in the first quarter, we have seen a slowdown. However, we consider, due to the monetary policy implemented by the central banks. However, I think that in Greece we have an important tool. This is the Recovery and Resilience Fund, the low-cost loans provided by the RRF mechanism. They have already provided 5 billion financing, and this is playing an important role.
So, all right, okay. Well, so far, so good. I'm gonna finish my other foreign bookend, Aziz, and you've had experience both in public markets and private markets in Greece. So you've seen the Greek investment landscape evolve. With that context, how do you think it's gonna evolve on a forward basis, and what are the main impediments here? What haven't we talked about yet that might not be, the full picture here?
First, good afternoon, and great to be here. Allow me to take a step back a bit and oversimplify a bit the Greek investment opportunity from a foreign institutional investor. And I'm specifically discussing and talking about private market investors, totally different than public market. We keep talking and hearing about facts, data, growth numbers, etc. But the reality is investment decisions in the private market are driven by the story. What is the story? And stories are the basis of any compelling investment rationale. And it is the reason why any investment is unlocked to deploy capital. Foreign investor starts investing in a country that they don't need to invest in. So there needs to be a development of the story in Greece that is happening now, and people are not noticing, I think, that this is an extremely different world we're living in compared to 5 years ago. So what happens is, on a also very basic level, is every investment decision is made by an assessment of risk and expected returns. And these two need to be fully synchronized, and they need to make sense together. High risk, high return, lower risk, lower return. 5 years ago, I think some of these conferences, the local mood was pretty gloomy. There was I would say, quite a negative risk assessment by the local community, as well as the banks, as well as foreigners. But also prices were quite cheap, and the risk reward there was quite attractive, and there was high risk, high reward. And that made sense. So the story of Greece was a story of dislocation on pricing and a recovery from a crisis. And foreign investors understand these type of cycles. And actually, they bought into it before the local capital did. So foreign investors started investing in Greece 5 years ago, buying into that recovery story before even the local community started deploying its own capital. Now, fast forward 5 years, massive improvement on the Greek risk level. I mean, we see that today and yesterday. I have to say there's an abundance of optimism, which is great, and I think it's, it's warranted, and, you feel the animal spirits are out from the local community, and, if you look at, I'm not going to bore people with the data, but, the banking system, the government, the entrepreneurs, the whole ecosystem is energized and has beefed up its capabilities. So there's a reason for optimism. At the same time, asset prices have evolved as well, so returns are not the same. And there's a big dislocation happening now, which is foreign investors have not been following the story on the risk side of Greece, because private investors are not macro investors, and they need to buy a story. For them, Greece is an opportunistic recovery story. It's high risk. I have that every week. I have discussions, and people tell me, we don't invest in Greece, or it's too low as 15% return in Greece is too low for the risk in Greece. And the reality is they haven't updated their risk perception because the story is not out. I think there's a shyness here in creating that story of what is the investment community, foreign investment community buying into. And the reality is what we're buying into today and for the next 5 years is not a recovery story, it's a rehabilitation story. We've moved out of the emergency unit, and now what we're investing in is a consequence of 10 years of quasi-paralysis on the supply side on every level in this country, not only real estate, on the production side, on the services side. And that 10 years has created a gap, and the dislocation today is in the supply gap, not in the pricing. So you might get lower returns, but the risk is way lower because the quality of your returns are supported by market dynamics that improve the quality of this return. And usually, this is what investors like. People prefer to make 12% in an environment that's safe than 20% with a risk of massive upheaval or loss. The problem is, I think that story is not out yet, that transition from recovery story to rehabilitation.
Aziz, what impedes that story?
Well, I'll tell you, I think, what impedes it, and also I'll tell you how I see this evolving is, one, there's the first two things are, no one here has full control of. One is the political risk. I think a big part of the risk, when you ask people, okay, what do you mean by Greece is risky? I mean, because people just have, it's an impression, right? It's remnant of 10 years of headline news. People don't know, they just assume it's risk and political risk. And the reality is, political risk, I think, and that will be determined in the next cycle, election cycle, is that I think the system and the political system needs to prove that it's not binary anymore. You can be like the UK or Italy or France, where you have massive local political issues, but the system is still standing, and there's not going to be a fire sale and people like foreign banks running out of the windows. So I think that's one, and hopefully that will happen.
So do you think it's a demonstration effect? That you go through an electoral cycle that nobody
There will
actually
be an
pays
electoral
attention?
cycle, and whatever outcome, there will be a day after, and could be better or worse, but it's not binary. It's not
a phase transition.
Exactly, and I think that will help the story. The second one, obviously, everyone talks about the investment grade upgrade. I think that's critical because it's a very simple summary of all the positives that happened on the macro side. People don't understand and follow bank balance sheets and primary surplus and performance of government and all. But one item gives you a summary story there. And I have to say it removes career risk from investing in Greece because you're investing in an investment grade country. No one will fire you if it goes wrong. Today, you're getting fired if you invest in Greece and it goes wrong. And the third one, I think, which is much more relevant to, I think, the audience and the business community, government, media, is really developing that story and pushing it. Own your success. I think there has been a lot of successful things happen in Greece in the last 5 years. People don't know about. I mean, even when there is, I'll give you an anecdote.
Why don't they know about it?
I'll give you an anecdote. You have 2 mega transactions happen in the market that should be out there proving to everyone that, Greece is back, as an investment opportunity. You have GIC with a 2 billion plus investment in Ecos. You have JP Morgan with Viva Wallet. And even if and I have that multiple times, even if you talk to people about this, whether they are local or foreigner, they tell you, oh, but that's not really Greece. Buying into a hotel is export business. You're not betting on Greece. Viva Wallet is a platform for for growth in Europe, etc. People always look at the glass half empty. But it's not a full picture. It's not accurate. The reality is these are Greek ideas, Greek concepts, Greek management, Greek execution. When you buy a NAP by Microsoft in Paris, you don't say, oh, this is not American. Being an export business doesn't mean you're not betting on the Greek aspects of that. And that needs to be, I think, put forefront by the media and celebrated. Not saying, oh, it's not really Greece. Every time there's an excuse of why they reduce the Greek risk.
Aziz, I think the Athens Stock Exchange will buy you out as its spokesperson for the next couple of years.
Well, I'll tell you, I've been putting my money where my mouth is, that's for sure.
I know, that's why you're here. But I want to be respectful of time, and also I think I gave less time. I scared Agnès in the beginning not to give her enough. I have a question for you, but I want to give you a different advantage if you want to ask a question against what you've heard so far. Otherwise, I'll ask you something. What do you?
I think we're all saying the same thing. Maybe Aziz thinks that we are still in a rehabilitation phase in Greece, and I really don't think so. I mean, all the investors in London, they are massively long Greece. I can tell you, the banks have done incredibly well.
Are they the same ones, or are you seeing new ones?
They are the same. No, they are the same ones that have followed. Greece was the headline for how many years? 5 years. Everybody knows the details of Greece. Maybe more outside than inside. They know that Greece's sovereign debt is 20-year maturity. They know that ECB rate hikes don't matter. The interest rates are fixed thanks to the European stability mechanism for forever. They are fixed through derivatives. The Greek sovereign risk will be acknowledged by credit rating agencies soon enough. And there is this cherry on the cake that is coming, which is not the case with other countries in the periphery. They don't have this coming up. So the political risk, that's maybe where I disagree a little bit with Aziz. It's well acknowledged. There is an opportunity there. I think what really needs to be understood is moving ahead and have a transformation plan of the economy. You are rich. Greece is rich. It is a pity that it's not well understood. It's rich in natural resources. Everybody wants that. They want to import it. They don't necessarily want to buy it in Greece. They want to import it. It's not about owning the land in Greece. It's about helping. That's what I was saying about the second mega trend. It's massive. This geopolitical fragmentation along alliances. This is the story for the next decade, okay? There's no way denying it. And Greece is part of Europe. Greece has been supported by Europe, and it can give back to Europe, but it can also just sit down and relax and chill. There is money for this. There is interest. There is clientele for the renewable energy. So it just needs a transformation plan to make this possible. And many of us said that, actually.
I think you're going to be my second spokesperson right there. I know Themos long enough to know that you probably give him enough time, he'll disagree with himself. So in terms of what you've heard so far, do you want to pose a question or you want to disagree with something?
No, I just want to add one element to what has held the story back. I think that first off, there's not a huge understanding globally that Europe has changed its policies quite substantially. If you speak to most investors, they will tell you, well, next years or two, we're going to have enormous fiscal discipline. I disagree with that. Secondly, I think the problem is that if you rip apart an economy from the international banking system, wiring it back in is not a trivial situation. I was on the investing side. You need to establish collateral agreements, you need to establish trading lines, brokers, access to investment banks, etc. And potentially the investment grade, but also the ongoing efforts from people such as yourself to link back, particularly the public investment side is important. Third, we don't have a deep public market. Not in the sense of the stock exchange, but mostly in the sense of not having mega companies listed, basically, right? Also partly because of the crisis, a lot of the big companies in Greece declined in value, and therefore you don't have a lot of options if you're a huge fund to invest billions into a deep liquid market. I think that with time and with normalization will definitely improve. And I think that a lot of the private side investments will over time start to seek their way into the public sphere as the investment thesis goes forward. And that will in itself bring in more investment.
Thanos, because I think you have to, tell us about how big is the risk ahead, short term?
I mean, the first point to make is that the global environment will remain very challenging. The second is that here in Greece, we need a stable government after the election. And once you have a stable government, the policy agenda actually is a given. Fiscal policy is based on the commitments to the EU and based on the EU rules that they will be reintroduced, and the commitments for structural policies and other policies at the NGEU. Third, we have to make sure the bureaucracy is reformed so that we are able to invest all these funds at the right time and in the right way. And fourth, I'm concerned that we need more time to spend this money right. And to avoid rushing into it, I think Greece should take its time, and I hope the Europeans will give more time for Greece and the other countries to invest this money in the right way.
Theodore, do we need more time, you think? Or you're ready, right? Guns are loaded for 2024?
No, I think, as I said before, the Greek banks are ready. We are well capitalized. We have enough deposits to finance the future credit expansion. And I think we also have support from the investor community. Look at the share price of the Greek banks. You know, have a significant recovery, highlighting the prospects of the sector and the economy.
Aziz, you have a magic wand for the next 50 seconds. What would you change in Greece to make you even more bullish?
Wow.
More bullish than you are, so that's a relative position.
Look, I think still the biggest impediment in Greece is execution risk. And that is across the spectrum of, you know, the whole ecosystem. So getting things done on time and, you know, is really the biggest.
Is this getting better or worse?
It's massively better. I mean, the last 5 years,
and what could help to make it
amazing.
what could help to make it even better? Is it the government decision? Is it what is it that makes it a difference?
Well, one, obviously government support for private investing, and I think it's there, so it has to continue because again, you can't. It's not a quick, recovery. It will take time. Training people takes time, but it's happening, and it's happening at a great pace. So you know, the story is there. I mean, The Economist this week has Greece as the European success story. I mean, people just need to accept that and start, you know, believing in it.
On that happy note, thank you very much all, and let's keep it at this. Thank you.